Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, June 12th, 4:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. But first, need to some breaking news from the Revere front. Ted and Connor. I'm going to be on vacation all week next week. Ted and Connor are going to be rotated into the daily market insight rotation going forward as well. But the important question is this really the Revere Roundup Daily Market Insight video if the person doing it does not begin with hello, investors? I put a Twitter poll out there, and it's about 60% of people say they better do their best hello, investors impression. We'll see. That poll will close in a couple of hours here. We'll see how that comes out, and we'll update it tomorrow. And then I'll make sure that those guys audition if it comes out, the final vote comes out that the the people listening do want to hear that. All right, let's get started. State of the market. We're in an uptrend as of May 6th. Got a little stronger today. You can check the trend gauge over here. Market leaders doing what they do best. That's outperforming in a bull market. And the five major indexes, some improvement today. Mid caps and small caps coming off of downtrend and into neutral as they are making attempts to clear their 50-day and 21-day moving average. Now, one close above those levels, and with the line sloping down, does not change the trend. So we might have to give this a couple of days to see if they can prove themselves. But the RG8 all showing a stochastic cross to the upside now. There is room to run on the upside. We're extended on big caps, especially big cap tech, but small and mid cap indexes and leaders, at least based on the RG8, have plenty of room to run. So we've got the green arrow there with the yellow sub arrow. See if the Dow and mid and small caps can come through for investors. Long term, all five of the major indexes still above their 200-day moving average. Market never gets into serious trouble unless we start to break the 200-day moving average. But we're not even talking about that. We're talking about new all-time highs on the S&P and NASDAQ 100 as CPI came in cooler than expected across the board, prompting a gap up. We held the gap into FOMC. Volatility after that, both to the downside and the upside, but the gains held. Good news if you're a bull. Here are the final numbers. 21 over 21 list up 1.88%, 17 up, 1 neutral, 3 down. Good stuff for the 21-21 list, and that doesn't include Apple, which was up another 2.9% today. And speaking of big cap tech, the big eight up an average of 1.65%, led by Apple, but even more so by Tesla, up 3.9%, and NVIDIA up 3.6%. The RG8, our 8 growth ETF composite, all 8 of them positive on the day, up an average of 1.75%. S&P 500 opened up 0.85, got higher by as much as percent, pulled back to about 0.5% with the FOMC volatility, but basically closed where it opened. Equal weighted, not quite as good. NASDAQ 100 up 1.31%, equal weighted 0.8. Dow gapped up 0.9% at the open, gave it all up. Closed down as 0.09%. Mid caps up 1.3. Russell 2000 small caps up 1.6. Global diversified 60/40 stock and bond up 0.72% with that CPI data. Yields came off. In-house, our flagship portfolio, GROTECTION, up 1.12%. Let's get into the charts. We'll start off, well, hey, let's start off with the Russell 2000 right here. And you can see the gap up. Closed at the low of the range after the afternoon fade with the FOMC volatility, but clearing the 21-day moving average, that's the green line. The 50-day moving average, that's the red line. Notice they are still sloping lower. Let's look at an intraday chart of this. You can see there's the gap up. We peaked right at 1030, faded into FOMC, and really weakness all throughout FOMC, never made a higher. We actually, on the big caps, which you'll see in a moment, made highs of the day during the volatility. Let's go in reverse order today. Next up, we'll go with the S&P 400 mid cap. Same thing, gap up, fade toward lows of the day, still clearing the 50 and the 21-day moving average. The slopes of those lines are lower, but at least for today, showing some relative strength. You can see the gap up there, move higher, peak at 1030, fade into FOMC a bit, and then volatility not benefiting mid and small caps after FOMC. So here's the Dow. Dow gapped up, cleared the 21 and the 50-day, gave it back by the end of the day. In fact, it peaked right within the first 5 minutes, selling off into FOMC, and then the always present volatility after 2 p.m. Eastern time. Let's go to the NASDAQ 100 next. And here's a breakaway gap, close mid-range. Here, strength and up more after hours. We'll talk about that in a minute. Here's the 5-minute chart, the gap up, run higher, high at 10:30. But note how it just went sideways at 10:30 all the way into 2 o'clock, unlike the sell-offs that we were seeing in mid caps, small caps, and the Dow. Volatility to the downside, dropping all around, new highs on the day, sold off right when Powell's presser stopped, made new lows relative to the pivot when the FOMC started, bounce into the close. All in all, a good day, up 1.31%. And finally, the S&P 500, we'll start on the 5-minute chart here. You can see the gap up, the move higher, minor fade into 2 o'clock, and then the volatility. This was a big sell-off in 10 minutes, dropping from 54.45 all the way down to 54.10. Quite a sell-off, 0.8%, but getting some back into the close. On the daily chart, it's still a breakaway gap, closed in the bottom part of the range, however. But after hours, AVGO, a big AI company, not a lot of people talk about it, went out at 14.95, trading now at 16.75. Huge jump up. They're also announcing a 10-for-1 split. Taking a cue from NVIDIA, and that is popping all the tech names after hours as well. So there's the 5 major indexes. Let's go to the VIX. VIX with a 12 handle, low 12, even broke into 11 during the day. Still has room to go to the downside, hasn't made lower lows as the index has made higher highs. But the decrease in volatility is bullish. Of course, it doesn't mean that we don't see spikes from time to time, but the bulls are certainly winning this week. We'll see what PPI brings tomorrow morning before the open. So there's the VIX. Let's go to the dollar. The dollar was weak today with the CPI news. Big range on the day, closed mid-range, undercut the 200, got back above the 50. You can see the volatility intraday here, gap down and ran into the close after the FOMC. Volatile day on the dollar. Let's go now to precious metals. GLD just barely positive on the day, ran into the declining 21-day moving average. If it can't get back above there, that's confirming the changing character on gold. Gold stocks up 0.75, also ran into the declining 21-day moving average and couldn't clear it. On to silver, cleared, but then couldn't stay above the declining 21-day moving average. Bitcoin was strong all day and faded big time late in the day after the FOMC. As you can see here, the gap up held the gap, volatility, but harsh sell-off into the close in Bitcoin. Just basically flat on the day and needs to hold yesterday's lows. It is up about 1% after hours. On to bonds now, broad bond index. Closed at the lows of the range, but up on the day, up 0.46%. You know, if bond prices are up, that means bond yields are down. Here's TLT, also at the low end of the range, but gapped higher. Let's go to the TYX. This is the yield, down 1.92%, and the TNX down 2.48%. Let's take a look at the volatility after the Fed here. Here is the 2 o'clock. No, that's not the 2 o'clock. Here is the 2 o'clock volatility. And remember, this closes an hour before the stock market closes. So you can see rates rising. Reason for that, Jay Powell in their Fed statement said that they were, last time when they had a Fed announcement, they planned on 3 cuts by end of the year. They reduced that to 1 cut by the end of the year, but the market still did not give up its gains. And that's some pretty strong resilience on the part of stocks, keeping those CPI gains. So here's the tail of the tape. RG8, all 8 components with the CPI hookup. We're going to show that in a second. All 5 of the indexes with a positive stochastic as well. I said CPI hookup. It's a stochastic hookup. NASI RSI still pointing down, and approaching oversold. So if that hooks back up, that can be another tailwind for the bulls. And the bottom line is, we're extended to the upside in tech, no question about it, 7% above the 50-day moving average. Let's take a look at that very quickly, as that is something that we track. And historically, when you get this stretched above, you can see 7% above the 50-day moving average. It's time for a pullback, but you can see after hours adding 0.5% onto that. Let's take a look at where the S&P 500 is relative. We start to get a bit concerned when we get over 5% above it. We're 4.3% above it. We approached 5% at the highs of the day. So back to the 21 over 21. FOMC just 1 cut this year. We've got PPI in the morning. We'll see if that has any impact. Day count from up 1 to up 2, 7 days above the 8-day moving average. Nope, I did not update that. It's 8 days above and 9 days above the 21. Sometimes all the to-do list items do not get checked off afterwards. So let's go to sectors. Up on the day, ITB, anything home builder related ran today, and that's basically because of the CPI data and rates coming down. Banks, semiconductors, solars, XLK, and XLY led. To the downside, the dollar, energy, communication services, staples, utilities, and healthcare. Only change in-house was to sell SARK. That was the inverse Cathie Wood ETF, and that increases beta because that was acting as a hedge. We cut it for a small loss. Plenty of small losses taken here at Revere. It's okay to be wrong. It's just not okay to stay wrong. And that increased our portfolio exposure up to a 1.60. That's our volatility adjusted beta calculation. Bottom line on the day, CPI gap up, FOMC volatility, but the gains hold, led by big tech. Speaking of big tech, here is a former big tech darling from decades ago, announcing some big AI partnerships and up 13.3%. Its earnings were actually lackluster. I mean, look at this, 2% 2% down on EPS versus a year ago, only 3% up on sales, but the market liked the story that they rolled out for AI. Projected next year, no earnings gains next year, but 21% in 2026 with a PE of 22. That doesn't really make this expensive. I'm not particularly attracted to this. I just think that there are better stocks, but it's very clearly something that we'll monitor, and it will benefit the NASDAQ 100, as this is a $385 billion company. Let's show AVGO, which is rocking after hours on their AI results, and up 12% now. And this is going to certainly spark the NASDAQ 100 as well, as this is a top 10 weighting, and it's also in the FANG Plus index. So big stuff there from AVGO. Let's go to the portfolio now. No, we want to go to, I want to show the stochastic for the RG8, because this is a bullish setup here. And it's all about probabilities, no guarantees, all about probabilities. And while we were fading on IWO, these are this is the growth half of the Russell 2000 while we were fading the stochastic reset. So let's take a look at last time the stochastic resets to zero. The result is, if you continue, it's a setup for higher prices. You see the stochastic didn't quite get to oversold. We hooked back up, and you're going to see a consistent theme. I'm going to go through all the RG8 here. We'll start off with WO. Next is SLYG. This is the S&P Small Cap 600 growth, hooking up as well. MDYG Mid Cap Growth, hooking up as well. QQQJ, this is Mid Cap NASDAQ 100, hooked up a couple days ago, continuing to the upside. PDP, this is a momentum, Dorsey Wright Momentum ETF, hooked up. SPHB, this is high beta, S&P 500, hooked up. Some of these a couple days ago, some of these are just catching up. IBD 50, one of the leaders there, and that fits right in with what we've been saying about leading stocks. IBD 50 up 2% today, completely or continuing to reinforce the outperformance by growth stocks. And ARK-K, hooking up as well, getting above the 21, the 50, and the 200-day moving average. And that's why we stopped out on SARK for a small loss. So good stuff there. Now let's hit a couple of highlights in the portfolio. No changes today. Let's sort the 2121 list, which actually has 22 names now as Apple was added. We'll go through the top 5. Coherent, making higher highs after their new CEO. So that's an N there, and they are a fiber optic cable provider for AI data centers. Coinbase, faded as Bitcoin faded, but still up 4.4% on the day as it rounds out the right side of the base. Micron, new highs, beautiful stuff. ELF, I told you I am the worst at trading ELF, and since I sold, it would probably go higher, and it was up 4% today. NVIDIA continues to be the market champ, up 3.5% and another percent after hours. We'll do one more, Abercrombie and Fitch. Perfect bounce is exactly the way you want to see a big earnings move up. Pull back to the 8-day and then just continue to ride it up. Let's go now to the losers on the day from the portfolio, and there wasn't much. SARK, the first one, no big deal. We stopped out of that. AppLovin, second close below the 21-day moving average, which has now rolled over. This is turning from a leader to a laggard. ON, just a consolidation day today after 5-6 days up, down slightly. And Bitcoin, we already showed, and Pinterest. When you only have to scroll through 5 stocks and they start being positive on the day, that tells you how strong the leaders are. Pinterest up 0.25% on the day. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're not on Twitter, but you have any strong feelings about the hello investors greeting, and Ted and Connor do their best impersonation of me, leave a comment on YouTube. We check and reply to basically all the comments. And if you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Reminder, our flagship GROTECTION portfolio for clients that have been with us, up about 30% since the beginning of November with that O'Neill follow-through day. Just what we do. We look for the best stocks in the strongest sectors during uptrends, pull back, protect. If things turn sideways or start to roll over, re-engage when they go higher. We've got rules to do it. We are transparently thinking about those rules in our portfolio every night on video. And you got a more transparent advisor, we'd like to meet them. And with that, I'll wrap it up for Wednesday, June 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.